Mr. Valliere's sort of base case that maybe Sessions goes and that maybe more people get fired. How does the market digest that, and how should the market digest that?
I think in your question, you had part of the answer. Last year, we had a whole never-ending series of stories. The market didn't care. This year, the market cares. And I think it goes to the underlying, what Tobias was talking about. There was a lot of optimism last year. There was deregulation last year. There was hope for tax cuts last year. That superseded everything. We got a little ahead of ourselves now, and the market is correcting. Now that the market is correcting, everything becomes an issue. So I think it really tells us more about the environment we're in, that the market is struggling right now, than that these stories are different than the stories last year. I don't think it's about the stories. I think it's more about the environment of maybe a slowing economy, which I think happens to be the case, or that there was too much optimism in the market.
And more about the fundamentals. Does that argument resonate with you at all, Tobias?
I think the fundamentals are okay. I mean, if we look at some of our lead indicators, if it's C&I lending standards, if we're looking at NFIB hiring intentions, things like that have been proven over years to be pretty good economic indicators, we're fine on the economy right now. The spending bill will probably carry us into 2019 as well. But it's more about where investors' mindsets are. Again, too excited. Now they're kind of more neutralish. They're not fearful, which would really get the potential for a rally going. We don't have fear in the markets.
Should we have fear in the markets?
We should or shouldn't is kind of something I try to teach my children. But in terms of what gets markets excited is the opportunity to buy when the fear levels are extended, and we just don't have that yet. Investors are still, despite everything, pretty complacent, and earnings are part of the reason. They're very confident that earnings will be good.
And thinking of complacency, Mona, what's really interesting to me is that we have so many investors that come on here now and say that we're 16 times forward earnings, therefore the market is a buy. I don't remember anyone saying the market was a sell when we're at 20 times forward earnings, because the investor psychology just doesn't work that way. What are your thoughts on pricing now?
Yeah, it's interesting. As we get later and later cycle, what tends to happen is valuations and multiples tend to compress, and really you have to be driven by an earnings story. So this year we look okay from an earnings perspective, to Tobias's point. We're looking at about 18% earnings growth in the S&P, which is, over the last 5 years, the average earnings growth has been 5%. So we're much higher than average this year. That could be a driver of S&P returns. Multiples at 16 times are starting to look more compelling, but we don't see this being a multiple expansion story this year. So, and once we get past this year, that's when we start looking at, okay, when is this recession coming? Are we looking at 2019, late or early 2020? And really, that's when we think about the big sell-off in the market. So right now we seem okay, but who knows how long that lasts.